The Fed is trapped, and Bitcoin knows it.
If the Fed hikes, they're going to lose the long end. If the Fed cuts, they're going to lose the long end. So the Fed's only choice is how do they want to lose the long end? And then what do they do to try to contain it?
Hold on. Listen to what he just said. If the Fed cuts rates, they have a problem. If the Fed hikes rates, they have a problem. Bitcoin seems to understand that no matter what Kevin Warsh says at Jackson Hole, there's a long-term structural problem that's independent of what the Fed says or does. And that's why underneath of Bitcoin's move back to 80K, something strange is happening. Fidelity's head of global macro said that Bitcoin and gold are beginning to separate from stocks and bonds. And after lacking everything for most of the year, both have room to run. One of the largest corporate buyers of Bitcoin says that the buyers that are arriving now aren't going anywhere. And Luke Gromen, who sold most of his Bitcoin when the market broke down, says that he's getting interested again. But why are all of these things colliding at once? What's actually going on? Who is the real buyer of Bitcoin in this size? There's a massive amount of capital that's flooding into Bitcoin that knows the Fed is trapped by the debt market. Today, we're going to talk about it. And we're also going to show you one chart that shows exactly every single time that the bottom is in. But it's not all roses. With Bitcoin going back to all-time highs, we're also going to explore the dark side of that coin that all Bitcoiners need to start preparing for. This is Dante Coco Bitcoin Simply. Let's go. Let's start with the price. We're back in that 79K to 80K range again, even though we did break 81K. I think if we break 82K, we're going to gap up to 90K like that. Bitcoin's price is moving higher. That doesn't tell me much. Bitcoin goes up, Bitcoin goes down. I get texts, are you okay? People get excited, people panic. What I really care about is how Bitcoin's going up. So this is a pretty cool chart because it tells us a couple things. The price is up, but the amount of funding coming into Bitcoin is down, and the spot volume is up. And this is interesting because it means that there are large buyers that are moving in size. When Bitcoin starts to rally, it's usually just leverage or a leverage position getting blown out. But this seems to be that there's a move of larger money, sustained money, that we haven't seen in the last year. Jurian Timmer, the head of global macro at Fidelity, is catching wind of what's happening. Bitcoin is becoming uncorrelated with stocks and bonds, and it has much more room to run, as the other asset classes have already made their move this year. Which is interesting because Bitcoin is always stuck in some sort of identity crisis. Is it digital gold? Is it tech? Is it NASDAQ with leverage? Is it a risk asset? Is it a hedge asset? Depending upon the month and the news cycle, all of these things are true. Yes, but something is different about this rally because people are starting to understand. I'm not just investing in an asset class. I'm investing against the currency itself beginning to collapse. Sam Callahan gives us a little insight into what's going on.
Everyone's celebrating this time as volatility has returned back to the upside. And I think this is related to what's occurred at the Treasury over the last week when they're doubling the amount of share buybacks. And really what this points to is the lack of sustainability of the fiscal outlook. And the currency debasement trade was really popular earlier in this year, and then AI kind of took some of the spotlight away from that. So Bitcoin and gold became out of favor. But the important point to make is that it wasn't a trade. This debasement was structural, meaning that it's related to the fact that we have $40 trillion of debt. They can't afford to have the long end of the yield curve rise because interest expense will explode. Interest expense is already the third line item this year. Fiscal deficits are on track to exceed last year. It's supposed to be 2.1 trillion. And investors are starting to ask questions. And they're looking at alternatives and hard assets because when they come out and say, hey, we're going to go to Treasury buybacks, really what they're saying is we're going to sacrifice the currency. And you saw that in the dollar move in response to that news. And you saw that with the moves of Bitcoin and gold. So people are returning back to hard assets that will benefit from an environment of currency debasement.
This debasement is structural. There's $40 trillion of debt. And the United States government can't allow the long end of the Treasury to continue moving higher for any longer because it impacts so many other things in the economy. It's tied to real estate, it's tied to loans, and it's tied to our own interest expense. And if you don't remember, we've been in wars perpetually in the Middle East and Ukraine and Russia since 2021. When policymakers begin intervening on the borrowing cost, they're choosing the debt system over the currency that you and I all work for, which causes inflation. Now let's bring back the opening clip.
If the Fed hikes, they're going to lose the long end. If the Fed cuts, they're going to lose the long end. So the Fed's only choice is how do they want to lose the long end? And then what do they do to try to contain it?
You can see now why if they cut, they have a problem. If they raise rates, they have a problem. That's because our system is completely dependent upon and connected to debt itself. Safety gives us a great analogy of what's going on and gives us a potential solution.
I think you can kill inflation. Theoretically, you can do it. And I think the notion that the system needs to continue to produce more debt is... it's a little bit like the alcoholic who tells me, no, you don't understand. I really need to take this drink right now because withdrawal will kill me. Yeah, well, of course, because you drank yesterday and you drank the day before and you drink every day. But, if you choose to snap out of it, you can snap out of it and you can stop. And yeah, it might suck a little bit, but then eventually you can just stop it. And so, you can just turn basically all the credit money out there, turn it into physical money.
So what he's saying, and what Hayek said all of these years ago that he's talking about, is what if we put all of this credit money, all of this debt money into physical money? The only problem is we're not going to be walking around with physical gold, physical paper, and physical clips anymore like we did back in the day. We need a system that's digital. And that's what Saylor's been talking about. The digital credit money system that is going to be backed by Bitcoin. What if all of the money in the world, that infinity symbol, was divided by 21 million Bitcoin? That's why people believe that Bitcoin could be $1 million, $5 million a coin in the future. And this is why we recommend Ledn. They allow you to play a part in this thesis. You stack and you save in Bitcoin, which has a finite supply of 21 million that is going to continually forever have more dollars flowing into it. So you don't want to sell the asset Bitcoin. You want to borrow against it in favor of the currency that's debasing. That's exactly what they let you do. You post your Bitcoin as collateral. You borrow up to 50% loan to value in dollars, which you get in your account in less than 6 hours with no credit checks, no capital gains taxes. Stay sovereign. Work with Ledn. Luke Gromen says there's a potential solution to the problems that we're facing. The only potential solution: inflate the debt away.
I think basically cut rates to zero at the front end and then have Besant do something at the long end. And basically the optimal move, they need to make a choice at some point. And it might already be too late. But back in 2021, if you go back to 2019, BlackRock did a white paper, said the next crisis, we're going to have to basically go direct, fiscal, and the Fed's going to cap yields, and we're going to work debt to GDP down that way. And that was essentially the playbook that they ran during COVID. And in early 2021, it looked like that was the case. And debt to GDP had gone from a peak of 130% for a moment in COVID. It was down to 120, and it was falling. And what we wrote in 2021 is, in order to put the United States on better footing, Powell doesn't need to be brave and raise rates. Powell needs to be brave and inflate this debt to put us in a better position. And he didn't. But at the time, I said we ran through math as how they did it after World War II, and that the GDP was 110%. But the punchline was that you would need 12 to 16% inflation for 3 to 5 years. And that's the only way out of this.
The only problem with this solution is the pain that it causes to everyone else, which is essentially political suicide. You cannot have 15 to 18% inflation for 3 years and get reelected after your 4th year. That's why this is unsustainable from a political perspective. But what other choices and recourses do we have at this point? The government has chosen to protect itself rather than the people that it serves or that got it elected in the first place. And this is why Bitcoin is going to march back to 125K sooner than you think. And what's going to happen when we get this next Bitcoin all-time high is we're probably going to see the Clarity Act passed. And we're going to see all kinds of new products, new ETFs, new Bitcoin products that offer yield in 11, 12, 13%. And Jason Lowery raises a very real concern. When all of this money gets sucked into the traditional financial system and the banking system, how much easier or how much of an inevitability is it going to be that we're going to see an Executive Order 6102? For those of you who don't know, that was when the United States government confiscated gold out of people's accounts. They're going to outlaw private ownership of Bitcoin itself in favor of saving the system, recollateralizing this system, pouring all this credit and debt money into a digital hard asset. They're going to say it's easier for us to control your Bitcoin than for you to control it. And that's where they get you. And that's why you need to have a conversation with the team at the Bitcoin Way. Members of their team will help you think through this process, what things you need to do, what skills you need to have in order to be prepared for the new Executive 6102. That's going to happen in the digital era. Protect your assets, protect your coins when Bitcoin does go back above all-time highs. Mark my words. This brings me to one of the oldest sayings in Bitcoin. Don't trust, verify. I got to show you this story. There was a guy posing as a San Francisco 49ers player. He had a fake career, a fake Instagram, fake bank statements, fake luxury cars, and multiple luxury assets that he used to flaunt on these social profiles. And he used this to scam women that he dated out of $1.3 million. And this is no different than a financial system that says, trust me, bro, and you don't even look to verify yourself. A bank statement that somebody emails you isn't verification. Bitcoin was designed around the opposite philosophy. And as Bitcoin becomes more valuable, this becomes more important. Remember that old chart that I told you about at the beginning of the show? One that predicts the bottom is in every single time? Well, here it is. In 4 days, we get to see whether this marker continues like it has for the past 10 years. Since 2017, nearly 10 years, every time Bitcoin has fallen below the 10-month moving average and then had one monthly close above it, the bottom was in. We're 4 days away from this happening. And it's foolproof because we're entering the same regime that we were around that time. If the Fed cuts, they're in trouble. If they raise rates, they're in trouble. So the conversation that we're having around Jackson Hole is really irrelevant. Whatever Kevin Warsh does or doesn't say on Friday doesn't really matter. There's no tools that the government has left. They either have to put themselves in pain or the people that elect them into pain. So whether Bitcoin's at 78,000 or 80,000 or even falls back to 72K, Bitcoin knows that the Fed has no options. And that's why Bitcoin is going to hit all-time highs again. I think we see 100K before the end of the year. We may see it before the end of September because it knows the Fed has no answers left. But what do you think? How are you preparing for this next bull market? I want to know in the comments. If you're preparing like I am, you continue to stack sats daily. I buy sats through different apps every single day, but I'm also doing it through Bitcoin mining. You can do it through a mining partner like Saz Mining, the leader in Bitcoin mining who allows you to just give them your money, set it and forget it, and they send sats to your wallet. You don't have to worry about repairing machines, contracts, any jargon with hash rate. They just send you sats below what you could buy a spot price Bitcoin for. And you get a machine that goes up in value when Bitcoin's price goes up in value. Something to consider. This is Dante Coca, Bitcoin Simply. Happy stacking.